The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate your growling and prowling us out here. We have the Dow Industrials down 114, NASDAQ off 17, S&P's down 13.5. That was a fast move, man. When I was just driving in here, the S&Ps were like
it sure was
3 points.
Let's pull it up real quick because I was surprised myself, man, as in we'll pull up the S&Ps because it was like, whoa, we're actually at session lows. And I was watching the market, same thing, 930. You made it all the way back up to 3,043, and then boom, 10 points like that, gone.
Pretty amazing. Gold's caught a bid out here. We're up 1770, $1,514. Now that's broken this downtrend. We'll take a look at that in a second, but it's got a wide price spread, has the volume behind the move. Silver up 27 cents, $18.14. Light sweet crude down 66, 54.40, and notes and bonds. The Fed said they're going to take a rest. The market says we're not taking a rest. We're going to start driving higher price, lower yield. 10-year up 22 ticks, 130.05. 30-year up a point and a half,
yeah,
161.02.
Watch out, right?
Seriously, it started yesterday, folks. As soon as Powell came out, the markets are so deviant, it's unbelievable. That you think that, okay, they said they're going to take a break. Markets at an all-time high. That would totally make sense, right?
How about a chart of the 10-year, man? Talk about, there's your 2 o'clock volatility on the announcement. You actually got a brief spike to 1.82, and we're about to get below 1.7, man. Yeah. And, I mean, just even check out that run again since 9:30, 9:40. I mean, just mammoth moves, man.
They're buying them mammoth. Hand over fist.
We just dropped from 1.73 to 1.7
right.
in a heartbeat.
Can you just put that just on a daily?
Yes.
Because when you see this, folks, this is like, we talk about it a lot, but listen, every time it happens, it's like, oh, my God.
Yeah, I mean, it's remarkable if you go back to April. It's still remarkable if you just go back to the beginning of August, right? Where you go from 2 to 1.44, was it?
Yeah.
1.42, back above 1.9, back to 1.5, back almost to 1.85, and now we're sitting at 1.7.
Right.
Yeah.
And, this move today is on conviction again,
How about the Fed Fund future? So, of course, we got the cut yesterday, and pretty interesting. If you remember, these odds were sitting at about 32 to 33%, and that being the odds of a cut anytime in the future. So December pretty much stayed where it was. But interesting that those actually went up.
They did.
After yesterday's meeting.
At 3 o'clock yesterday afternoon, the December one was at 23.
Was it? So they've all gone up then.
Yeah.
Because these, I think, were sitting at around 31, 32.
That's pretty wild, right?
And now they're sitting at 42, right? Yeah.
And listen, that could have been, the bottom line is that you had the numbers come in from Hong Kong. They're in a recession, which totally makes sense. The bottom line is that they're not getting business done there. It was a minus 3.47. That's quite a contraction in their GDP.
Okay.
Hong Kong.
Sorry, minus 3.47 for their GDP?
That exactly.
Okay.
So when you get a contraction, 2 quarters, that's a technical recession. And that's what Hong Kong came in with.
So their GDP went down 3.5%? Is that what you're saying?
Contracted from quarter to quarter, yes.
Okay.
Silver, let's go take a look at the silver market out here. What do you have with silver? Silver right now, okay, this is good too. Silver, 60,000 contracts out here. We're at 1816. Now let's take a look if this baby is not as clean. Take it from the top. It's not that bad, actually. So, you can make the case, that's last Friday, too. That's pretty cool. So, last Friday, that's when gold as well as silver, folks, had given it up on price, but had volume behind the move. And that's what these markets are going after right now. So, silver had gone to 1835. You had 134,000 contracts. It has a chance of doing that today. We're at 60,000. And if that's the case, that's saying that now these highs are going to be game of 19 $1.75, and that one, if you look at the gold market, you can see this is a decisive break.
Definitely.
That one is too, but this is pretty cool the way this is shaking out. You're at 226,000 contracts, and we bring this over. Oh, it's the same setup too. Interesting.
Quite a move, though, for sure.
Yeah, and you're going after the same Friday high volume swing point. And the real kick is going to be, can we hold price up there today? So we'll get 360,000 contracts. That was the high that was generated at 1520. We're at 227 right now. And then what you'd be looking for, of course, you'd be looking for that to basically hold price. Some of the higher volume, well, Apple. Might as well go to Apple, right?
Sure, earnings, right?
Apple,
Facebook,
yeah.
2 of them. Let's do it.
AAPL. And let's see if it's hit an all-time high. Tuesday was its all-time high.
Yeah, I don't think it's gotten there. It was 249.
Nope, look at that.
Yeah. What is that high if you could scroll over?
Yeah.
249.75. We made it to 249.17.
That's interesting.
Can I pull up Thinkorswim? I want to see
Yeah.
where we went after hours, though. See if we got a spike. We sure did. 250, 250 initially on that spike.
Yeah.
But pretty quick. These are 5-minute bar, 15-minute bars. So pretty quick.
And then Facebook, right?
Yeah. Facebook as well, man. Right to 200 on the dot. Pretty interesting. And now sitting at 195, still up about 4% on the day. Not bad. The expected move, what was that, like $12, I believe I recall, 11, 12 bucks on Facebook.
Yes.
And it was a similar about 9
and what did they get?
or 10 on Apple. Well, Apple right now is up about $4, but it did make it as high as about 9. Pretty close to that expected move, but it was only a brief moment. And then Facebook, even on the highest of the highs, it was $5 above where it's at, so about $12.60. Pretty close again.
So it hit on Facebook,
pretty close again, but really, when you look at it, it pulled back so quickly that you might not have been able to profit from buying that volatility if you didn't have your orders in or whatnot.
There's no doubt.
Yeah.
And it's what Tommy's talking about, folks. This is really crucial to understand, because if you're in the option market, this is, okay? The bottom line, the option market, number one, has to be opened when the equity goes to your price,
Sure.
okay?
Right.
And that's always wicked when it can go to your price before the market or after the market.
Definitely.
You know?
Definitely.
So some of the higher volume equities out here, Western Digital is getting smoked. That's down $8 at 53. Wayfair also getting smoked. We're going to bring that up in a second. That's down $14 at 86. You get what's this, Twilio? Twilio is down 12. So that's quite.
What
a
number
hit.
we're looking at? Twilio.
Twilio. That's quite a hit too. So let's go to Wayfair first. Wayfair is
it's earnings season, man, everywhere.
It is, and this is a high-end furniture place.
Okay.
Online, and this is a mess. So let's take a look at this.
Cut in half since June.
Yep, monster number. So you're down from 173.
Literally cut in half, almost to the dollar.
Look at that. And you know you're blowing away a swing point right now. So it's an ABC down. Oh my God, look at this. Your 8 point is 166. Your B's 106, $60. Your C point's 135. So what is that? 170, approximately 175. No, 75.
All right, do those. Okay.
75. See,
I lost you there. Go ahead.
Your 8 point is 166.
Okay.
Your B point is 106.
So $60 leg.
135, 170, 75.
75, yeah.
And right now you're at 86. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 147, Nasdaq off 30, S&P's down 17, and China is saying that they don't see a long-term trade possible at this point, right?
Yeah,
trade deal,
and it really shouldn't be too surprising to anyone paying attention. I mean, You got the president looking for a political win in the heat of an impeachment hearing. Phase one is very, very minimal stuff going on. You're talking about just almost rolling back some of the harm that's been done for tariffs for phase one.
Well, but Kudlow said out here today, everything's going good.
I heard. The cheerleaders for the president are out as they usually are.
Yeah.
And you got a Bloomberg story out here that's talking about conversations with people in Beijing, high-level officials, warning that they're not going to budge on some of the toughest issues out there. They remain concerned. Also, that they can't trust the president, even if they agree to a deal, that he's going to honor it.
Right.
So that's part of the worry here. You really look for a big deal. Why would they? The president's made deals before, and then he's going back on them in an instant. So you got China policymakers gathered in Beijing for a key political meeting that's set to conclude on Thursday. In meetings ahead of, the plenum, that some officials have relayed low expectations that future negotiations could result in anything meaningful unless the U.S. is willing to roll back more of the tariffs. In some cases, they've urged American visitors to carry that very message back to Washington. And, so that story coming out. I'm just thumbing through. Yeah, so the first step, according to Trump, is meant to lead to a more comprehensive agreement involving more substantial economic reforms than those contained in the proposed initial phase. But Chinese officials are skeptical, saying that they would require the U.S. to withdraw tariffs in place on some $360 billion in imports from China, something many don't see Trump being ready to do. People familiar with China's position said the tariffs don't all have to be removed immediately, but they must be part of the next stage. China also wants Trump to cancel a new wave of import taxes due to take effect December 15th on American consumer favorites, such as smartphones and toys. As part of the Phase 1 deal, Beijing is open and willing to continue talks after an initial phase, but both sides recognize it would be very difficult to reach an agreement on the deep structural reforms in the U.S. that the U.S. is pushing for.
Yeah, no doubt.
Let's get the last one, because China has stated for months that a final deal must include the removal of all punitive tariffs, and has balked at reforms in areas such as state-run enterprises that could jeopardize the Communist Party's grip on power. It's politically unfeasible for Xi to accept any deal that would keep the punitive tariffs. Nationalists in the party have pressured him through state-run media editorials to avoid signing an unequal treaty. There's a lot going on there.
The last one's important too. Reminiscent of those China that signed in colonial powers.
Reminiscent of those,
because
China's.
China hasn't. I mean, the Communist Party in China started like 75 years ago or something. Where they just had They just had an anniversary. I mean, it's not as long as ago as you think. You know what I mean? Not in general, but.
And this is where you get, to get into the details. You get Trade Representative Lighthizer and his team, which declined to comment, have been adamant that the duties on the $250 billion in Chinese goods imposed early in the trade war be maintained over the long term as a way to enforce any commitments China makes. Well, you got China saying they got to get rolled back. You have our top trade representative saying they're going to stay. The questions over the future reflect a change in the U.S. strategy. After ramping up tariffs and pressure on China over the summer and saying it would settle only for an all-encompassing, President Trump, looking for a win there, said, we'll take a phase one to get out there on the podium and say that we got a deal.
And I heard a number this morning, and we'll look it up in the break on Bloomberg on the way coming in, that they said, I'm not sure whether it's an expansion of 24% of our farmers are going bankrupt right now.
Yeah, we'll pull that up. It's a big number. I've seen some numbers as well.
It was a big number, folks, okay?
And the amount of numbers that the subsidies that they're receiving are going to represent in terms of their profits are pretty staggering in terms of the government subsidizing the farmers just because.
To keep them alive, right?
Yeah, exactly.
Natural gas.
Natural gas. We get the numbers at 10:30, man, and I'm going to refresh this over here while we do it. So we're looking at a build of somewhere between 86 to 88 billion cubic feet, right? I get lost in the numbers. Are so big, man.
And that's interesting. They're still looking for a build. And it's October. I guess it's not cold enough yet. Yeah, okay.
I would say we just got so much natural gas. They're looking for a build 12 months a year, man. I mean, it's pretty serious, They really are. Yeah. So let's pull up the contract and see where we're trading at right now. We'll pull up commodities. We'll get into natural gas. Again, it's about 1024. We're looking at the December contract. We're trading at 267. And so lining up maybe potential trades, we have 265 as a price point here, but 275 is our action. Let's see where they line up for noon. Noon, we could use 270 as a price point, not too great. And then on the dailies, 270 as well. So you're 2.5 pennies away.
Right.
Now, keeping in mind, if you're bearish, not a bad trade in that you...
All bullish, right. Meaning if you're just doing... one side, right?
Yeah. I was going to say only bearish because on the bearish side with 270, you're not paying much premium because you're 2.5 cents in the money. Yeah. But if you go on the bullish side of this, you're 2.5 cents out of the money, so you are paying the premium. But if you line up line up the 11 a.m.s though, you do get that 265 here. And let's just say you're bullish, right? You're bullish on the number. The contract's trading at 267.1. You're able to get in at 267.6. And for that 5-tick premium, your losses are capped at 28 for that. I'm going to just guess a number just because it doesn't harm us that we are looking for more natural gas. We're looking at 98. Every week, man, more than the market thinks. So we'll see if it comes in. But 98 billion cubic feet's our guess. And jumping back to the number, pulling up the chart to see where we've been trading. As it loads. So that's what I was thinking. A little bit of volatility, man. So maybe the market's...
That's quite a move.
Maybe the market's already pricing in the same thing, saying maybe the number's going to come in a little bit bigger than the dot.
67 already. That's...
big time.
Yeah, that's...
And that's a move from only 8:45 this morning, man. Mammoth number, for sure.
That's pretty wild, man.
Yeah.
Let's see. NG... natural gas, active contract. Okay, so... Because the natural gas has had a huge move topside the last 4 or 5 days. When we brought this up yesterday, it was
exactly. Check it out.
Okay, so this is pretty cool, man. What happens here, folks, is that if natural gas can't hold a bid, just, because you make the case you get a consolidation like with 270 at the top. Oh, we hit 273. I see. Okay. So Yeah,
we hit it for a brief moment.
This is it wants to back down again, man.
Can I jump back in? So let's say we're bearish, right? You know, you always want to look at, and there's lots of ways you could trade it. It's kind of easy on the Nadex platform just because they line up so well with easy defined risk. You get to choose your 11 a.m., your noon. But what's nice is, so if you're bearish, what I would do here is I would look for one of those where you're capped to your losses at 270. All right, so let's see where the noons line up. Even the noons, you're capped your losses at 270. That's your upside limit. Yeah. So you're going to be selling this contract at 266.3. The market's at 267. It's barely, you know, you're not even paying a penny, right? You're paying 7/10 of a penny almost. You're selling at 7/10 under, and you're able to sell it at 266.2. Your losses are capped at 270, and you got a profit run down to 250.
That's a big number.
And you're capped at noon. It's not a bad trade, man. Because the nice thing is slightly in the money, right? That's where just think of an option. You're not paying as much premium. You're 3 pennies in the money, so you're risking that. But if it expires where it sits at right now, you lose less than half a penny. Not bad.
And that's a noon.
That's right.
Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 197, Nasdaq up 42, S&P's down 21. Natural gas, what do we have out here?
We got the number coming in at a build of 89 billion cubic feet. So bigger than the estimate around 86. I believe the whisper was about 88.
Okay.
We chose 98.
Yeah.
We just transposed the 8 and the 9 in there, that's all.
Oh, is it 98? Is that what you did?
That's what I chose,
Okay.
yeah. But to see how that's hitting the market, let's see. Jumping back to the charts. And pretty muted response. Looks like that might have been pretty priced in and pretty close to the estimate, all things considered, right? 86, 88 was the whisper, 89 the number coming in. So you get natural gas trading at 267 off the heels of that. And just to kind of recap again, which is what I mentioned in terms of, that bearish trade, the cool thing about that is that if it expires where it's trading at, you get no movement. You're only losing the premium you pay, which was the 0.8 of a penny, right? Versus if you went in there on the 11 a.m.s and you decide to sell, where was I? Yeah, the 265, the noons are 265, right? Or maybe we're going on the other way. But if you sold out of the money was going to be the point, right?
Yes.
You lose everything.
Right.
Which is if you had sold the 265.
And that's crucial to understand inside the option market, folks.
Yeah, you're paying a lot more premium.
Yeah, and people tend to want to do that because they're inexpensive. They look inexpensive, but they're not.
And that's where, you can swing for the fences, man, because you buy out of the money, you peg it right, your multiples are through the roof. But guess what? The reason why is because most of the time you're going to expire worthless. And swinging for the fences.
Yeah.
How about those Washington Nationals, man? Pretty remarkable. They get it done. Four road wins. They had one hit, I believe, through 6 innings. And then they scored 6 runs through the final 3 innings on 8 hits.
Wow.
They had 2 home runs in the 7th. They jumped ahead 3-2 and never looked back from there.
That is amazing.
Pretty remarkable series. First title for that team. So pretty cool. Got to be happy for Washington. Houston's had their run. They were the big favorite coming into this. And so the Nationals, World Series champs.
And Houston. Oof, that's pretty hard to take.
Yeah, and it's really remarkable when you think about they had 7 games.
Right.
And anybody that bought tickets to any home game watched their team lose if they're in that home city. I'm sure you got teams, fans in there that are rooting for the away team. They live there or whatnot. But that's a lot of money spent on World Series tickets, man, to watch your team lose each game. But I imagine that Nationals fans being okay with how that ended.
Yeah. So the market, folks, bottom line is not liking whatever
What's happening, man?
is happening.
The red is escalating.
We just went down another 10 points inside the
Maybe they're
S&Ps.
finally waking up to phase 1 of that trade deal being not too important to the actual trade deal that might spur the economy.
And you can see what you have here. Bottom line is that you just took out, let's see, well, it was a spike low yesterday. I don't even remember that happening, but
I don't need to back it up one more. That's 10 a.m. about?
Yeah.
Did we get a number maybe at 10 a.m. Early yesterday? And you almost made it back down to that level coming into the Fed.
Heartbeat,
3,023.
23.
And we're sitting at 3,022.
Yeah.
And, man, you back it up we're down a full % from where we almost finished yesterday. Boom, just like that.
Yeah. And, you can see this. I just put this back 9 days. And there's no reason that did you break into
That's
that?
Friday.
Yeah. There's no reason you can't run down to this.
3,000 on the dot, baby.
Yeah. That'll be quite a day, man. If that's what we have out
We
here.
might be there before the show's over, man. We got 24 minutes left in the program, and we're only 20 points away from that level.
And if we take a look at the Dow, look at this. This is first look at that. I only saw 3 in the green. You got Apple putting 17 positive points, Merck putting 1.
Apple's the only one.
Taken away from it, yeah. Goldman minus 28. Boeing minus 28. Caterpillar 25. 3M 19. They're selling it off.
JP Morgan, IBM, Johnson & Johnson, Walgreens.
Big numbers, man.
Yes.
So the XLF. Let's see what the XLF's doing because.
With Goldman down, solid $4. There you go.
Look at this. I want to see if this actually hit the high. It was going after this high, but I think the high was 30 something. That's even more than that. Well, that's 30, 32.
Yeah.
And we made it to 29. Oh, that's not enough.
No, I mean, that's a huge, right? I mean, if you're almost $2 away from where we're at right now, as in 2032, right, would be about $2 away from 30.32. And to put things in context, so that's $2 we're away. $2.84 would be a 10% pop. It's easy to be like, oh, $2, right? No, you're trading at 28 though. That's call it a 6, 7, 8% pop that you need to get to that high.
And what you got to, folks, is February of 2018, and that's where the XLF got smoked. It went from 29 to 26.
Yeah.
In a week. Look at that. That's a number, man.
Yes.
That is a number. The Tigers and Tigers just talking about in the den that the transports, and the transports, no doubt. If you take a look at this, I'm going to do the IYT.
Okay.
Which is, the ETF structure in it. But these babies, this has been coming down the last 3 days pretty intense.
Yeah, I'd say that's a decent drop over, even call it 4 days, man.
Right.
You put it on the weekly, which today's Thursday, that encompasses the 4 days. What did we just go from? 196 to 187.
Right. And you didn't make it to the top of the range.
Yeah.
Which is 200, which is still going into the October of 2018 downdraft. And that's when, in 1 week, we went from 202 to 185. So
yeah.
There's definitely a heads up out here right now.
Let's see what we got going on for earnings for today. All right, let's check it out. We're coming into near the end. We'll get their calendar. Quite a day yesterday, of course, with Facebook, Apple.
Let's look at Starbucks, too. Starbucks came out,
yes, they sure did, yeah. SPX. We're going to narrow this down to just the S&P stocks that we're waiting for the earnings. So here are the numbers that we've already gotten this morning. Back forwarding to aftermarket. Okay, so let's see. Nothing too remarkable here. Tomorrow, we get Dish, CVX. What else jumps out as here? ExxonMobil.
Yeah, Clorox.
Berkshire.
CL. Berkshire. Okay.
Yep,
yeah.
that'll move your XLF.
Yep. That's the largest
heaviest weighting. That's right. Yep. And then we just, and then you're already on to next week, man. And if you scroll down, lots of stocks still remaining in there.
Yeah.
But we've got some giants already. Disney will be interesting in terms of how they shape the market, in terms of what they talk about coming down November 7th.
Yeah.
I believe that's a week from Monday. No, that is, Friday. A week from Friday.
Friday. Interesting.
Nope, maybe Thursday. Let's see.
Maybe,
I better get it right.
Because a lot of equities don't come out with earnings on Friday.
Yeah, I better get it right.
All right.
No, a week from today, Thursday, November 7th. Right. That makes sense, yeah.
So November 1st tomorrow, Halloween today.
That's right.
Halloween. The candy companies make a fortune today. This is really a big holiday. It's amazing how much, I don't know the exact number, but the amount of money spent on Halloween for these retailers is
I can imagine.
It's a large
I've
number.
ended up with buckets full of Halloween, bring it into the office the next day, try and force it on everybody else so I don't end up eating it.
I have to go out and get some, because what happens, folks, we're at the front of a building and it's commercial, but there's only four commercial spots, right?
And there's a lot of residential in our corporate space.
Hopefully we'll see some little kids running around. All right. We'll have to go get some of those.
You're
going to
be holding down the fort at 6 o'clock, 7 o'clock tonight?
Why not?
Why not? Totally. Do it.
Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 218, Nasdaq's off 40, S&Ps are off 23. And we were just talking about those farms. So U.S. farm bankruptcy surged 24%.
I think this might, hopefully it stays with us. This computer's thinking overtime right now, man. But pretty remarkable, right? Bankruptcies, quite a surge, man. 24% on that trade war. And another, let's see if this one did finally pop up. So check out this stat, right?
Yeah.
Almost 40% of projected farm profit this year will come from trade aid, disaster assistance, federal subsidies, tax dollars, all right, and insurance payments.
Yeah.
Based on Department of Agriculture forecast, that's $33 billion of a projected $88 billion in income coming straight from
the feds,
the trade aid. I mean, pretty remarkable, man. And that's your headline.
Isn't that socialism?
I hesitate to see how people don't call it that, but you know what? I'll just leave it at that, man.
Yeah, no,
I could go on and on. You know, you're talking about $30 billion. So farm bankruptcy September surging 24%, the highest since 2011, amid strains from the trade war with China and a year of wild weather as well. Growers also becoming increasingly dependent on trade aid and other federal programs for income, figures showed in a report by American Farm Bureau Federation, nature's largest general farm organization. The squeeze on farmers underscores the toll China's retaliatory tariffs have taken on a critical Trump constituency. So you get the president handing out, handouts to his people with an election basically 12 months ahead. Figure also highlights the importance of a phase one deal the administration is currently negotiating with Beijing to increase agricultural imports in return for a pause in escalating U.S. levies. That is one of the big things that was going to be in that phase one, soybeans. Right. But guess what? You're almost just recalibrating before the harm was done. Almost 40%, and there's the tagline that we had in there, of farm profit this year coming from trade aid, disaster assistance, federal subsidies, and insurance payments. That's 33 of $88 billion in income. Chapter 12 bankruptcy filings in the 12 months ended September rose to 580 from a year earlier.
That's so sad.
That marked the highest since 676 in 2011. The total remains below historical highs in the 1980s.
Yeah, the 1980s were a disaster.
So recent bankruptcies were concentrated in the 13-state Midwestern region, a key battleground in the presidential election where grain, soybean, hog, and dairy farmers have been hit by those trade disputes. Pretty remarkable, man.
Yeah.
Just billions, tens of billions of dollars getting handed out. And, we're all paying for it.
And they still can't make it.
No.
They still can't make it.
No.
Let's go take a look at the XAU, the HUI. Now, both the XAU as well as the HUI should also be breaking a downtrend out here today. Yeah, it's going to be decisive, too. I like it. Okay, so we get the XAU right now up $2.24. This baby here, and this is good, too. You watch this. I'll show you something, folks, okay? This, you're going to see also that yesterday, even though it didn't get highs, you can see that expansion of volume. 34 million shares. You're pushing into 40. Now, it's going to be cool. This just took out the swing point from last Friday. And I suspect we're going to get more volume. Now, we don't get that till tomorrow morning. But that's also saying we're on our way up to the highs of September, which XAU is 101. You go into the Gold Bugs Index. More than likely, I mean, these trade together, really.
Yeah.
Gold
Especially on a day when you have gold up so dramatically.
Yeah. And you get the HUI. This baby is up 488. Same type of setup. You had the expansion of volume yesterday. Also, you get 22 million. You're going into 25, and it's taking out the swing. And I expect we're going to get more than 25. Let's go to the GDX because the GDX will tell us. The GDX out here. Oh yeah, look at that expansion of volume yesterday. Holy cow! So the GDX, that's quite an expansion. 54 million. You're going into 59. You did 14 right now, and you took it out. Now, that's saying we're going to basically, we got to hold price because we haven't held price yet. Oh, this is interesting. See, 28.17 was the highs of Friday. We've only made it to 28.15 thus far.
Yeah.
So now you got to hold price, and you need an expansion of volume. I suspect we'll get the expansion of volume because when this comes into the close on a big day like today, what ends up happening is that they throw a huge amount of volume in at that close. So
let's check back to natural gas. Can we do that? See
Yeah.
where that market's moving? Where are we? There we go. Is that the one? Oh, nope. Got to get my screen set. What did our... All right, I might have clicked away. We'll have to pull it up after the break. I think I might have closed down that screen.
let's go. Bring up the. Let's see. I don't know the ETF for that one. Let's go look at Amazon. So we had. I mean, I believe all the big dogs now have come out with their numbers, right? Yeah. They have for this quarter. When we're talking Amazon, Microsoft, Facebook, Netflix. And so this is intriguing. What Amazon, it's like, okay, man, what are you going to do for me? Well, it did quite a bit on earnings day, no doubt.
Quite a buying opportunity at those lows, man.
Yeah. That being said, bottom line is that
long-term buying opportunity.
Yeah, this right here, you're hitting some major resistance evidently at that 1788. Last swing is 1798, and it hasn't been able to basically hold this price. And we're coming into holiday season. So
that's right.
We know they're going to do the numbers.
That's right, man. Although it is interesting, right? Part of what they came out with on those earnings, so they were looking for maybe $87 billion in revenue, I think, and they guided to maybe 80 to 86. It's a huge missed guidance in terms of saying they were going to take in maybe $87 billion for the next quarter.
Okay.
The quarter we're now currently in, the holiday quarter. And I believe they came out and gave it a range of 80 to 86. That was one of the staggering things that came out, along with that they spent more money, right? They missed on earnings per share.
Okay.
They also had a little bit of a guide down on that holiday quarter, but guess what? The market was like, we're cool. Everything's cool.
Yeah.
In Jeff Bezos' world, everything's fine. Seriously.
Let's get over and take a look at the British pound because, bottom line, the pound, it's up 30 ticks. Nothing heavy there. The euro.
Got an election coming down in December.
Oh, yeah.
That'll be interesting.
Euro gave it up on price out here. We made it up to 111.76. You're at 111.37. And I believe what we did get in the yen, though, is backing off. And that's why I see gold moving. Yeah, see that? Interesting. We didn't want to go over this price, folks, which is a 109.32. And look at that. We get to 109.29 yesterday.
Yeah.
That's amazing, man.
Yeah.
And the yen gave it up today. Now we're down 70 ticks. That would have been a real problem. And it's amazing to me that the correlation between this yen and gold is so fast. It's just fast. And so if we go look at the Nikkei, now the Nikkei,
excuse me,
tonight it's going to probably have some heavy problems because that yen, when that gets strong, man, the Nikkei gets out of its mind. Yeah. It's going to be tonight. You know, because last night it was up. It was a sideways move last night.
Yes.
Currencies.
Oh, man, right? Let's pull up I like the 4-quadrant one we pull up. You can kind of see them moving.
Oh, you can.
We got dollar top left, euro top right. There's your yen back down here.
Yeah.
And look at that pullback, man. It really started last night. You can see our time, and it really began yesterday with some volatility on the Fed. Yeah.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 186. You get the Nasdaq off 30. S&Ps are off 19, and we're going to be getting a tweet storm all day long, folks.
We sure are,
with
man.
The markets being down. There's no doubt.
Pretty remarkable that you get the Fed out there cutting literally on the day that we had the S&P closing at a record high,
right?
And our president saying that the Fed is screwing us all with their tight policy. So pretty remarkable. He's out there again tweeting about 15 minutes ago. This coming out, so pretty pertinent as to right now. People are very disappointed in Jay Powell and the Federal Reserve. The people, the Fed has called it wrong from the beginning. Too fast, too slow. They even tightened in the beginning. Others are running circles around them and laughing all the way to the bank. So pretty remarkable. I think we're all used to that by this point. Nothing too surprising out there. But the president on his soapbox tweeting out there. And I'm pulling it up. Let's take a look one time as we wrap this up and check out our natural gas numbers, see where we're trading at. I'm logging into the account right now. We'll get a live quote of that natural gas contract. We'll pull it up. 2 seconds. Let's pull the platform over here. We'll pull up our commodities. We'll get into that natural gas contract. So we're trading at about 267, and we're down a little bit. We're trading at 265 and change.
Look at that. Still having a hard time holding price.
Yeah, made it down to 264 briefly, but 265.8 right now in natural gas, and the market kind of got ahead of that move, trading from 273 down to 267 ahead of the inventory numbers.
You know, when we go, just look at that oil quickly. CLZ9, that also is getting.
I think they're a little worried about the trade deal on oil there. You know, if any type of a real trade deal is off the books,
right?
Well, you're going to see an economic slowdown, and the economy uses a lot of oil, man.
No doubt.
Yes.
No doubt. Stay right there, folks. We get Think of Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, Phil.
Thanks, man.
Go get them, folks.